Valterra Platinum began trading just weeks ago. The now independent, globally listed platinum group metals producer spun out of Anglo American and is valued at around £8.5 billion. The company enters a volatile market facing rising costs, shifting demand, and investor pressure. But with a disciplined payout plan, a strong South African asset base, and new access to international capital, the company says it's ready to define its own path. Well, it's a pleasure. Joining me is Craig Miller, the CEO of Valterra Platinum. Craig, thanks very much indeed for your time.
Thanks very much, Devan, and good afternoon.
Well, it's been just a few weeks since the demerger, which marks an historic shift. Maybe perhaps I should start by asking you, anything that stands out for you during this exercise? I mean, it didn't happen overnight. What's been the biggest lesson from launching Valterra as an independent entity?
Well, I think it's really been the opportunity that we've had to showcase the quality of the assets that we have at Valterra Platinum, not only from our mining assets, but also the way that we look at processing them, so refining them, and then ultimately then marketing them. It's been a real privilege to be able to just, demonstrate that on the global stage and really just, showcase the quality of the assets that we have, but more importantly, the talents and the enormous skills that we have within the company to be able to take us forward.
Mm-hmm. Craig, you've committed to returning 40% of headline earnings in a volatile platinum price environment. How will you balance that with capital reinvestment?
Yeah, so we've as a company, we've very focused around extracting the value that we have in our business. We have some of the longest life, highest reserves in the PGM sector, and we're really focused around extracting that value, and we'll do that in a disciplined way. We're focused around value as opposed to volume, and through that, particularly at our Mogalakwena operation, where we can look to sustainably increase production in a very capital disciplined way, so that together with the investments that we've made in our downstream processing capabilities, both our smelters and also in our refineries, enables us to really extract that value that we see from our existing asset base. And because they're so well capitalized, and because the way that we're looking at operating them and the work that we did last year in reducing our costs and being disciplined in our capital investments, we believe that we can sustainably balance not only the reinvestment into the PGM business we have, but then also that disciplined return to shareholders in the form of a 40% base dividend, 40% of earnings. And then if we've got extra cash that we've generated after investing back into the business from a sustaining capital perspective, would look to return that to shareholders in the form of an additional dividend or potentially a share buyback if it's appropriate.
Mm-hmm. So much of that really depends, Craig, on what the price outlook is, right? So, platinum price is under pressure. What's your near-term price outlook, and what kind of market would allow Valterra to accelerate buybacks or expansion? What are you looking at?
Yeah, so we've, clearly PGM prices have been volatile, but for, during 2023 and 2024, they were relatively subdued, even though the platinum, palladium, and the rhodium, which are the three key metals in the PGM space, were in deficit. And a lot of that was on the basis of sentiment that the battery electric vehicle penetration and battery electric vehicles today don't contain any PGMs, that penetration and that adoption in a lot of the countries was going to be far greater than what's actually transpired. So if you think today, back in 2023 and into 2024, in battery electric vehicle sales represented around about 10% of total vehicle sales. So still 90% of vehicles are internal combustion engine vehicles or growing hybrids, which still contain PGMs. And so with that change in not necessarily as quick an adoption as people were anticipating, that has then, really caused people to pause and to think. And as a consequence of that, you've seen some sort of price correction taking place, because actually demand is far greater than where supply is, and the deficits that you see in our market are likely to continue for some time. And therefore, that gives us the confidence, and we have a positive outlook as a PGM producer in terms of the outlook for the metals, not only in the near term, but in the longer term, because the unique properties that platinum group metals have as part of the energy transition will enable us to see continued and sustained demand for many decades to come. And as a consequence of just where prices have been, you're not necessarily seeing a number of my peers bringing on new supply to the market, and that will then continue to keep those deficits in place for quite some time.
It's interesting you say that. Where do you see the biggest upside potential for platinum? I mean, is it green hydrogen, jewelry, medical, or elsewhere? What you're looking at?
So certainly in the near term, we see platinum being particularly used in some of the industrial applications. So manufacturing of chemicals, also in the auto catalyst sector. So 40% of platinum goes into the automotive sector in catalysts for both internal combustion engine vehicles and also in hybrids. But then into the longer term and well into the next decade, certainly PGMs can be used for the hydrogen and for mobility specifically in fuel cell electric vehicles. And if just 10% of future automotive demand is fuel cell electric vehicles, you're looking at a demand segment of about 6 million platinum ounces. So quite a material demand segment. And we think that will come in time. It's not going to happen this decade. But certainly can happen into the future, and PGMs will continue to have a role to play in mobility, and therefore the transition between ICE vehicles and greener, more efficient mobility transport will enable the role of PGMs continue to have a future.
Now, what are the biggest operational or ESG challenges Valterra must overcome now that it's no longer under that Anglo umbrella?
So I think clearly, we have a rich legacy, having been part of the Anglo American group for almost 30 years. And the group and ourselves have been pretty focused around sustainability, and particularly, just how we run our operations, not only from an environmental perspective, but also how we think through the role of communities and how we create economic development in our host communities and really help to uplift the community participation. And that doesn't change for us going forward. We've got 5 strategic pillars, which is really focused around, achieving zero harm, driving operational excellence, really leveraging from our simplified organization structure, investing in market development and investing in our growth opportunities as the asset base. But underpinning all of that is sustainability and how we either protect or create value for all of our stakeholders. And so as Valterra Platinum, sustainability remains front and center of everything that we do, so that we can then just share the value that we look to create from the assets that we have and distribute that to our host communities, to our shareholders, and to our host governments.
Yeah. Now, Craig, there's market chatter about consolidation in the PGM space. I mean, would Valterra be open to acquiring or being acquired in the next few years?
So, Devan, I think just the quality of the assets that we have and the enormous potential that we have, we are certainly focused around leveraging the value from the key assets that are in our portfolio at the moment. So we're not looking at any other form of consolidation in the PGM space. Our opportunity is really driving operational excellence, ensuring our assets operate in the lower half of the cost curve, and then really making that sustainable investment in the likes of Mogalakwena, Amandelbult, Mototolo, and Unki, which are our 4 key assets, and then in the downstream processing. So no, we're not looking at anything else at this particular point, just really focusing on extracting the value that we have from the amazing endowment that we have as a company going forward.
And then, Craig, with your LSE listing, I mean, are you seeing interest from ESG or international funds that might have not invested before? What's your experience there so far?
Yeah, so as you can imagine, as part of the demerger out of the Anglo American group, myself, together with my executive team, have spent a great deal of time engaging with shareholders, existing shareholders and new shareholders for us that were part of the Anglo American group. And I think, front and center for them has just been what's our strategy as a PGM producer, but also linked to that, how we would look to operate as a company going forward. And certainly what I've been at pains to explain is the rich legacy we have, the standards and the processes that we've inherited from the Anglo American group. We'll look to retain that. And I think that's given existing and prospective shareholders a lot of comfort in terms of how we would look to operate sustainably into the future, and really focused around protecting the environment, our decarbonisation ambition in terms of reducing CO2 emissions by 30% by the end of the decade. It's well advanced, and continuing to keep our target of carbon neutrality by the end of the next decade, as well as then focused around our communities and social upliftment, have given sort of the shareholders the confidence in terms of how we'll look to operate in the future. And I think, no doubt, that will create interest in the form of other shareholders that are interested in holding a really world-class PGM producer within their portfolio, and realizing the returns that we see are evident in our business.
Yep. And then as I let you go, Craig, I mean, suppose no listing plans here in Toronto with the TSX, I would imagine?
Not at this stage. I think we've worked hard in terms of enabling our primary listing in Johannesburg and the secondary listing in London, and I think that's a good place to start. And our focus really is then back into the business and generating the returns that we see are available from Valterra Platinum now and into the future.
Well, Craig Muller, CEO of Valterra Platinum, thanks very much indeed for talking to us.
Thank you, Devan, and good afternoon.